We've got Liang Du in Cape Town. He's the head of asset allocation at Prescient Investment Management. He joins us from our Seapoint studio, and with me in studio in Johannesburg, we have Mike Schuessler from economists.co.za. Okay, let's start with you, Mike, seeing as you're closer to me.
Okay.
0.25 precedent.
Well, I think it is putting out a precedent that's saying we're going to raise rates. We're going to raise them slowly. And, you know, when you look at the effect of this, basically, for a person with 100,000 Rand outstanding, for each 100,000 Rand outstanding on his home loan, it's going to be slightly less than 10 Rand.
So it's manageable.
So it's probably manageable. Let's say the typical home loan in the South African market, because homes cost quite a bit these days, I would say is probably around the 800,000 Rand outstanding, maybe even less.
Yeah.
And that probably means less than 80 Rand for the average household out there. I think on its own it's manageable. Obviously there's other factors. There's inflation going up. We've got petrol price increases very likely, those sort of things. But if you look at it overall, it's very manageable, I think. And I think, however, that we're going to probably see more. So this time around it's a different trajectory with interest rates going up, but slower than before.
What about you, Liang? You think that was a surprise decision? I thought it was a bit of a compromise.
Yeah, I agree with you, and I thought it was a good decision. I think as asset managers, the thing we worry about the most is that, exactly like she said, right, she can't really control the growth situation because the growth situation has a lot of other factors involving in it, but certainly she can control the inflation situation. So if as asset managers, if we see the central bank stop reacting to inflation, then we have a problem because it puts a dilemma in our hand whether we trust the bonds market anymore and what yield do we demand to hold South African government bond. I think from what she did in January as well as now, small rate hikes, as you mentioned, will not affect the economy probably materially, but certainly put confidence in asset managers to say, you know what, we're vigilant on inflation. If something needs to be done, we'll be there to do it. So the capital market has something to
So that sounds like good news for the Rand.
Yeah, I think I would expect it to be stable, to be honest. I think everyone was expecting 25 bips, and we got a 25 bips, so I don't see a lot of fireworks. But I think overall it's exactly that. I think if she does nothing, the Rand weakens a lot. That itself feeds into inflation, and then we have a problem. By doing little steps, at least it keeps the Rand in check, it keeps our bonds in check, and that's certainly encouraging on the longer term cycle.
Mike, Liang said something that I want to pick up on. She cannot control growth, but she can certainly affect inflation. I'm wondering about that because there's no demand side.
Well, if you look at yesterday's retail sales, they came in surprisingly strong. So that shows you there is some sort of demand.
Yeah.
Yes, on the durable goods side, it is down. I think what allowed them to increase interest rates more so than people realize is that consumer confidence was up.
Yeah.
And I think they said, okay, let's just wait a minute because we're consuming as an economy, but we're not producing. And she can't do much about the production.
Yeah.
She cannot hold strikes. That's a different angle altogether. It seems nobody can hold strikes. And if you look at the growth forecasts from the beginning of the year when we were at 2.8, in fact, if you go back to the beginning of last year, the majority of economists thought this year was going to be a 3.5% growth a year. Now we're hearing 1.7. I think that's on the optimistic side, but let's leave it there. It means growth has halved. And most of that, 99% of that, probably comes from all the strikes and the capacity constraints, such as, for example, electricity and so on. And it doesn't matter what she does with interest rates, there's nothing she can do about that. And her job and her task is to look after inflation. And already we have, if you're a saver and you just put your money in the bank, you're already on the negative side. And if you look at the risk that people should take, you cannot expect older people to now have more and more shares in the stock market, which looks anywhere on the high side because of loose American policy. So ultimately, she also has to look at the bigger picture, and she has to say, well, I want people that save also to have a little bit more motivation to save, because we're virtually now 2 years of a negative interest rates, real negative interest rates, and if you look below the risk rate of, say, 2.5% or so, we've probably been there for a lot longer.
Liang, do you think that this will encourage more savings? I mean, you're in asset allocation, which is sort of quasi-savings business, isn't it?
It is. I think high interest rates always encourage more savings. That's always been the case. We do have negative real rates here in South Africa, and amazingly, as an emerging economy, we're some of the biggest spenders of all emerging economies. I mean, it's hard to find another emerging economy that spends as much money as we do. So certainly some higher rates would help encourage savings.
I want to talk about this vicious cycle we've got. We've got the cost of living, unaffordable. Workers are working, getting nothing to take home. Well, after all deductions and after they've paid their living expenses, there's nothing left. What do? They go on strike, and then the governor comes and says, well, we can't afford these wage demands because it'll push up inflation.
There's one thing that she's saying, and that you're misinterpreting maybe,
Yeah?
is that the cost of living, inflation is supposed to measure that. It might not be perfect. I agree that inflation probably underestimates or the CPI underestimates the actual rate of inflation. But the fact is, workers in South Africa for the last decade or so have been getting 2.3% above the rate of inflation. And I'm not quite sure if productivity increased above that. So what she's saying, if you look at the productivity in the economy and you look at the wage increases that people are getting, we've got a situation where people have really done quite well, those of us that are still in a job. The problem is that we don't have enough people in a job. That's one issue. And she can't do much about that either. But what she's got to look at, and she's got to say, right, if this carries on, it's going to keep on increasing that rate of inflation, which is your cost and your standard of living, continuously going up. So the thing is, I've got to break the cycle on that side. I cannot break the growth cycle. I cannot stop people becoming unemployed but what I can do is I can make it at least more affordable for people over the longer run if I can stop inflation.
Okay, let's take a break, and when we come back, we're going to explore that a little bit more.
.99% Zulu has returned to the Lyric Theatre in Gold Reef City in Johannesburg this weekend.
Now do the Mateba chai. The Mateba chai. This guy doesn't know how to do the Mateba chai.
Sarah Dupree is bringing his celebrity impersonations to Johannesburg. Audiences will be treated to nights of glitz and glamour and Cher, Lady Gaga, Tina Turner and more impersonations.
That's Afro Showbiz News, Saturdays 7:30 p.m. on SABC News.
Welcome back. In studio with me, Mike Schussler, economist from economists.co.za, and in Cape Town, we've got Liang Du from Prescient Investment Management. Let's go to Liang. Liang, right at the beginning of a speech, the governor talked about the global hiking cycle, mentioning in the UK is most likely the one to hike rates first. Is that going to dictate policy for us going forward?
I think it definitely does. I think when it becomes more attractive to invest in the US relative to us, it reduces our carry. So certainly flows will be tempted to go that way. But I do think that the UK hikes will be slow as well. As mentioned, the US is quite a bit far away. So probably about 2015. They might surprise being a little bit earlier than everyone else thinks. But on the Europe side, which is our major trading partner, they're far behind. In fact, they're almost just about to start a new round of QE. So I think in terms of how big a threat that is, it wouldn't rank extremely highly. And secondly, if you look at long-term history, initially the first few rate hikes is often way behind the curve. So they don't have as big an impact as everyone thinks they do.
But, we've had this situation recently about QE coming down, people fretting about emerging market currencies losing value as a result. Now we've been downgraded here in South Africa, which means we pay more in interest rates. Doesn't that make it a little bit more attractive to invest with us despite the increased risk, even if the US were to increase its rates?
You're absolutely right. I think if you look at long-term history, what also tends to happen is that, remember, for QE to be cut down and for the US to be raising rates, often it means their economy is really recovering. And emerging markets are often a good beneficiary of that. We export a lot to the developed markets, either directly or indirectly via China. And either way, the increased demand often boosts our economy. Certainly what, as I mentioned earlier, what Governor Marcus did today, keeping us having a consistent policy in terms of inflation targeting, as well as having high interest rates in South Africa, would make it attractive for people to invest with us. But having said that, South African bonds had rallied from 8.9% in January all the way down to almost 8.2 or 8.15 at the moment. So we're actually slightly less attractive than we were in January.
Oh, okay, Mike, this metal strike, she assumes, well, not governor, but the MPC, assumes a speedy end to the metal strike. They've already told us they can hold out for longer than AMCU.
The problem is, I think, is that if you look at the difference between the parties here, it's basically 2%. Every week you lose 2% of your annual wage. So it really shouldn't make sense to carry on striking for the NUMSA. So if I was looking at an economic thing, I can say, well, they've now lost about 5% of their annual wage. They're demanding 15, they've come down to 12. The employers came up to 10, drew the 10 and said, well, we're going back to 8 if you don't accept. And they also then came down to 10, but they only wanted a 1-year agreement, whatever. But the point is there's about a 2% difference now. And I think that should hopefully encourage people to come to an end on the strike economically. The problem here is that there is a political element in the NUMSA strike. And at this moment in time, that's probably a bigger driving force. And that's the problem. Because I think the economy is getting hurt because people have political ambitions on the one side and they want to make a political point on the other. If they want to strike longer than AMCU, their damage is going to be huge because AMCU was 70,000 people, affecting about 125,000 people in the mining industry, and overall with suppliers about 338,000. We know it's about 220,000 people on strike here. We think it affects about 400,000 people in the industry, and if you look at suppliers and everything around, it's probably a lot bigger. We don't know that number, but it's probably closer to 500,000 or 600,000. So obviously the impact of a NUMSA strike is going to be, and is, per week, a lot more. So if they're going to strike more than AMCU, it is going to be really damaging.
Liang, that sounds like we're going to have our economy come to a complete stop. And basically that means everything you've just told me about our attractiveness goes out the window.
Absolutely. But I think I agree with Mike. I think NUMSA now has to have a show of force, not to lose union members. So what AMCU did was extremely disruptive for our economy overall. So I don't think they had a choice. I think they had to go out and strike that to show that they're doing something. But exactly like Mark said, they're quite close at the moment, and hopefully it will be a speedy recovery. We can't get to a situation where no one wins, and I think that will be a bit insane on everyone's part to get there.
Okay, yeah, we usually do get big jumps coming from low bases, but let's talk about food inflation. That was one of the first things the governor mentioned. What are the causes? Because if we look at demand, people are buying less.
Well, I think on the food side, we do see people still buying. And if I look at the retail sales and I look at the other indicators there, the one thing why food inflation is coming down is because we've had very good rains. We're now going from a sort of an import price scenario to an export price scenario, and so on. But there have been other factors worldwide. The food prices lifted for a while because of the Ukrainian situation, and that pushed up food indexes, which would also then push up food indexes here. Ultimately, the other fact is that the rand does play a role in the bigger food prices, such as maize and so on, which again has a knock-on effect in chickens and the like. And at the same time, we lifted our import tariffs because we wanted to protect our local industry. So ultimately, that led to higher chicken prices and the like. And I think that's where we are at with food prices. Again, it's very difficult to see with food prices how interest rates are going to make a difference there. But I think it's more a case of you have to be seen to be doing something from an international perspective, and you have to give consumers a reason not to buy that much so that we can bring our current account a bit down, or the deficit of the current account, a bit down.
Okay, there's one positive effect just from that. But Liang, let's talk about not just food inflation, but overall inflation. What are the causes? What is our problem?
Well, I think economic 101 is always that there's a pile of goods and a pile of money, and you have too much money, inflation goes up, right? Because as economy, we can only produce so much. We can't produce more as economy than what we can. So if there's too much money, inflation goes up. The second big cause of inflation that comes through is just people believing inflation will go up. That's what makes the wage price spiral so scary. So that's why also having small rate hikes also helps, because it enforces to people that inflation won't get out of control. Back in the days when inflation was very high, when we all go into our job for annual wage reviews, we were looking for 10%. When inflation was high, you said that you won't accept anything less than 10. But nowadays, at least not this year, but in the recent few years at least, people are willing to accept 5-6% because they believe that inflation is going to be 5-6%. So it's the psyche plays a very, very big role. And I think the Reserve Bank does a lot there in terms of anchoring hopefully communicating what their inflation target will be. And with people believing that target, people won't drive inflation up as much as they otherwise would be.
To both of you, earlier on I spoke to someone who said, well, people are hungry. Hungry people become angry. And this would be a good reason for the governor not to hike rates. Well, she's gone and done sort of a half measure. Can we now expect people to become upset, or are they going to take it?
I think if you look at whom the interest rate hikes are aimed at, typically the richer part of the population has loans. Yeah. It's not the poorer part. So yes, we hear of people having loans that get welfare checks, but that shouldn't be allowed in the first place, because those people can't afford loans anyway. So ultimately, it's not the hungry that this is aimed at. It's actually, in the South African sense, the richer part or the wealthier part of the country.
You agree, Lang?
Absolutely agree. I think unsecured lending is a problem here in South Africa. I think lending practices, especially towards the low end, need to be reinvestigated. Certainly because if you look at the miners, what they actually earn, it's a good living, it's a decent living, and they should have no problem surviving on that. And people are going hungry. As Mark previously said, the people who are employed are actually doing okay. You actually have a good wage. So the problem is they got into situations where they took out too many loans that they otherwise are allowed to take out, and perhaps some of our practices encourage that, and that should be regulated better.
Well, gentlemen, sorry, we're out of time. I would have liked to ask you a few more questions, but that's the nature of television. With me, Mike Schussler from economists.co.za, and over in Cape Town, we've got Liang Du from Prescient Investment Management. That's the end of the broadcast for now. You heard it. 0.25% is the increase on the interest rates. Bye-bye.